And we're live. Hey, good morning, everybody. It's Jonathan Harmon with the J. Harmon Home Team, powered by Keller Williams. And this is This Week in Real Estate. It is, what is it, the start of the third week, I guess, in January? Is that right? Yeah. And it's been an interesting couple of weeks. I've got Mr. Ronnie Martin, my friend and everybody's favorite commercial banker from Pinnacle Financial Partners, here with me. And Ronnie, we got to hang out a little bit last week, and we did a thing at Cedar Glade on Monday evening, 1 week ago today, and just kind of gave a snapshot, a recap, if you will, of 2022 real estate market and kind of financial markets to some extent as well.
Sure.
Specifically loans and interest rates and all that kind of stuff. And it was interesting. We had you on the panel, and we had Bryan Nale with Primis Mortgage, and then we had Grant Hammond with Metropolitan Brokers. So we had a real estate agent. This is like a bad joke. A real estate agent, a mortgage lender, and a commercial banker walk into a bar.
Grant was really impressive. I had never met him before. He's a bright dude.
I tell people all the time, he is the wisest realtor on Facebook, and he gets on there and he talks about what's going on, and he talks about it in a way that, even though it's meat. I mean,
Right.
he is in the weeds with it,
Right.
but it's still mostly followable, right? Some of the stuff I have to just kind of take and trust that he knows what he's talking about. But he tells it in a way, he tells the story in a way that just about anybody can understand, and it's good, and he's pretty good at prognosticating and telling what's going to happen and what's not.
Well, as you know, content is everywhere, and as we're always trying to figure out how do we spend our time and where do we place, from a value standpoint, who do we trust, who are we listening to, and what's most valuable based on the amount of time we have to do that. I could see where, as I was listening to him talk and hearing some of the things he would say, I was like, he's one of those people. I was like, well, I think I could listen to him more. I think I'm interested in what he has to say. And versus a lot of times when I hear people talk about things, probably people say the same thing about me. Or like, hey, he's saying the same stuff everybody says, right? And there's no new stuff there.
Right.
But I heard some new stuff with what Grant was saying, and it wasn't just this is my opinion, this is what I think. The guy's got some information, he's got some statistics, he's got some context.
He's got a degree in theoretical mathematics, for God's sakes.
Which is
I
impressive.
don't even know what that is.
Yeah, very impressive. Very impressive dude.
Yeah, no, he's good, and if you have an interest in the market and you have an interest in keeping up with specifically residential real estate, I would suggest following Grant Hammond on Facebook. He posts maybe 2 or 3 times a week, and it's very statistics driven. It's but he always puts here's what I would do kind of spin on things, or here's what you can expect kind of thing. And he's pretty darn accurate, as more accurate than most people, and as accurate as the most accurate other people would be about what's going on. What was interesting though in that table discussion, whatever you want to call it, that panel, was the difference in perspective between you and the other two. It was very much the optimism. There was balance to the force up there, right? So there was some optimism, some pessimism, and I think between them, I think we all got to a point of realism,
Right.
And what I thought was very interesting, and I truly didn't expect this, just my own ignorance. There's not one way to look at a market situation. There's not a right or wrong necessarily, right? And I think when you can step back and go, okay, so why does Ronnie have a little bit more of a pessimistic view on things versus Grant had a significantly more optimistic view, and Brian's kind of a little bit in the middle of that. And it's funny because that's exactly how you guys
How we
sat.
lined up.
Yeah. And I think it all comes down to, you mentioned that your number one job for the bank is risk management.
Right.
You make money, but you're managing. If I've got this huge pile of money that's somebody else's, right? Your deposit accounts, those kinds of things.
Right.
How do I make money with that and limit the risk? Not eliminate, but limit the risk to an acceptable level.
Right.
And that's what governs your behavior
That's exactly
in your
right.
job.
Yep. And I think so. What I what I try to frame is I'm an eternal optimist, and I really am. And a lot of people
I would not have known that last week.
a lot of people question me on that, and they'll say, "Well, you say these things," and I do say lots of things that might contradict that. But generally speaking, I tell people all the time that I think if you're investing, it's always a good time to be investing. There are,
And to clarify, investing, you said this the other day, it's always a good time to buy real estate.
that's exactly right.
Yeah.
I think where you have to be very careful is as you examine what your individual goals are. And so that's the nuance that we get into that, when you're listening or you see something on social media or you hear somebody say, this soundbite, out of context, those things can be very dangerous
Yes.
to people, especially people that aren't highly informed or, they aren't very experienced. And so I tell people all the time, if you've got a long-term horizon, I use the example with Warren Buffett. Warren Buffett will say, "I don't ever sell anything," and the reason is I'm not in the business to day trade. I'm in the business to buy and acquire long-term assets that I think appreciate over
That's
time.
wealth building as opposed to making money.
Exactly. So he's got a book that he quotes all the time, and I think Benjamin Graham is who wrote it, and it's called The Intelligent Investment Advisor. And so Warren Buffett talks about that a lot. But it's I've tried to read it, and I'm not smart enough to read it. But one of the things Buffett talks about is, if you're not ever going to sell, then it's always the right time to buy. And it doesn't mean you just, throw darts at a board. There's some other nuance to what you're doing.
Sure.
But, back to the role that I play, I think, as we select advisors to help guide us in what we do, if they're asking us the right questions about what our time horizon is, what our objectives are, what we plan to do with the asset, whether it's a piece of real estate, a stock, or whatever the case may be, I think, the only real risk is buying short term. I think you're making some calculations at that point that you could get caught in. And so, there's another real estate adage that we talk about, and it's probably appropriate in stocks as well, but you make money when you buy, not when you sell. And so what that means is the implication there is eternally optimistic as long as you understand your time horizon and as long as you're being thoughtful about what you're doing. And so that's the lane I try to stay in, and then I back away from that based on someone that tells me, hey, you can never go wrong buying multifamily, or you can never go wrong investing in new construction or rental property, just in a vacuum when people start making those statements. And I'm like, yeah, well, you could get hit by a train and kill yourself. I mean, those things happen to people financially. And the other piece is, and this is where I kind of have the behind the curtain scene of some of this stuff, a lot of the people that you will hear say those things, you don't ever see the end result of what happens to those folks. And sometimes I do. And so some of the same people you might hear out there saying, buy, are really struggling on the other end. And so you got to kind of balance some of that stuff as you're going through it. But no, it was interesting. Again, back to Grant, I thought he had great perspective. I thought he had great data to support, the comments he was making. And you said it. My job is to mitigate risk, right? And so while I am the optimist, when I hear people make decisions like, it doesn't matter what the interest rate is, I'm going to do X, Y, and Z, that's kind of scary. So, your guard goes up. Or they're saying, again, you can never go wrong in land or dirt. That's not true. You can get smashed, right? You can get hammered.
We saw that in 08, 09. You had people that were holding all kinds of land, but they were leveraged to their eyeballs on it.
That's exactly right.
And if it didn't, they were, they had a very specific cash flow plan. And if it didn't flow like it should, the bank's going to want to get paid in the short term, and you're sunk.
That's exactly right. But to the point we were making earlier, if your time horizon, if you've got a 20-year time horizon, well, if you had assets that you purchased in between 2002 and 2007 and 8, yeah, if you didn't have enough liquidity and enough income coming in through 8 through 12, then you put those assets at risk. You put your capital at risk that you had invested in those assets.
But if you were able to hold them.
Exactly. That's the thing. So it's all about the time horizon to me. And so when we start, what gets me nervous is when we start making bold claims that say, hey, I think this is going to end in 6 minutes and 27 seconds. And so we know exactly what's going on. The truth is nobody knows that.
You can't.
I mean, it's just impossible.
It's too complicated of a landscape for you to say, well, this one indicator says blank. And because of this one indicator, and there's I don't even know. I mean, hundreds, thousands of different indicators that work into that nuance. And at any time, Russia can invade the Ukraine.
That's
and
right.
You know what I mean? And it's like, never saw that coming, you know?
And that's why you heard me say I go back to consumer confidence. And I'm not trying to oversimplify things, but you know, I think when you get to the place where you can simplify something to the degree that you can say, well, I can count on this being a good data point all the time, right? Mm-hmm. So interest rates are an issue, inventory is an issue, supply chain's an issue, pandemic is an issue, the Fed stuff is an issue. You could go on to the point you're making there, 1,000 different variables. Mm-hmm. But all of those things, and this is Ronnie Martin's view, all of those things have a specific impact on people's confidence to ultimately make a decision to buy or sell. And so in my mind, inventory is impacted by that. If rates are super high, but people are still buying because they feel really good about the market and they're selling because they feel really good about the market, well, interest rates are a data point, but they're not the most important data point, right? Because you're going back to consumer confidence. So I think that, always when we get into a situation where we want to put all of our chips, because so this is another thing, you're a math guy, so you'll appreciate this. If you flip a coin, right, and I use this example all the time, your odds are 50-50, right? Mm-hmm. And if you flip a coin 10 times, your odds are still 50-50, right?
Even though you might get 7 on one and 3 on the other.
Exactly right. Mm-hmm. It's always 50-50. But what happens is the psychology of what we do, whether it's the psychology
I'm going to get
people,
heads more often.
That's exactly right. Or guess what? It's been tails 8 times.
It's got to be heads this time.
What's the odds of doing that? 50-50.
Right.
It's still the same. And so that stuff plays in.
That's a gambler mentality.
It is. Mm-hmm. And that's where I think people make mistakes. And that's the messaging that you hear, I think, a lot of people in the marketplace talking about is, hey, the Fed can't do this. Inflation can't do this.
And you hear surely at this point.
It's exactly that. So I'm going to go back to, you got to be very careful when you get into situations where we can't predictably know what's going on. When there's limited housing stock and you're getting 20 offers on a house, and I think you mentioned this, Brett lost out on a deal that was 100 over ask. Mm-hmm. Well, we can all argue that that's good or bad. I'm not going to argue that that's good or bad. What I'm going to say is it's very predictable, right? What we know is for that moment in time,
this is what
we understand what's happening, right? Yeah. There's no way we know what the heck is going on right now.
100% agree with that. I mean, I've got 3 listings listed right now. One is I've got 4. One's under contract, 3 are listed. And, the one that's been listed the longest, mm-hmm. in my opinion, is by far the best deal.
Interesting.
Oh, it's gorgeous. It's a beautiful home. It's a little bit unique. It's in a wonderful subdivision. I mean, like everything about it, and the price point is right. It's below some of the, it's come down. We talked about that a little bit, 6-7%. It's a little bit below what the older comps show. I mean, it is perfect, and it's sitting.
So can we talk more about that? So why is that? Why do you think that is?
I think that there's several things. I think that, I know for sure, month of November in Rutherford County, the total number of closings was 41% lower than the November before.
Okay.
So there's just plain fewer people.
Right.
Right. I haven't seen the December numbers. I'm sure they're out. Probably by now. They usually are about 12 days or so into the month for the previous month. I just haven't pulled them yet. But my guess is feel pretty confident that December was probably even lower, like further off
year over year.
Yeah, I think so.
Okay.
I mean, it was dead.
Yeah.
So I think that plays a role. If there's just fewer buyers, it is at that $500,000 price point. So $500,000 combined with 7% interest rate.
Yeah.
There's just a smaller pool of people in our area that can afford it, whether they will or not.
Right.
So I think that plays a role in it. And I think it goes back to consumer confidence. You see rates hit over 7%. You see different things going on. You hear this little chatter about COVID starting back up in China, and you hear all these different things. and people are scared.
Right.
And fear is a huge driver
For sure.
in consumer confidence.
For sure. You know, it's interesting. So I would ask you this question, and I think about things like this all the time. So I would guess Bryan saw an uptick in activity over the past couple of weeks because rates hit a 4-month low, right? Mm-hmm. So I think for most people I know, that's a fact. It's an indisputable fact. So where we get, all of us people that think we know something, where we get in this gray area is that really because interest rates went down? So I'm going to go back to the consumer confidence piece to that is it really that substantial? Hey, once we dropped an eighth or a quarter or whatever, did the math all of a sudden work, which is what is prompting the activity? Or are people getting off the fence because rates are moving down and they're saying, hey, this may be the cheapest, or now I can do it, or now I feel better, or now I'm sleeping better, or are people just doing it because it makes $27 difference in their payment?
I'll throw a wrinkle out there. It may not be any of that.
Right.
Okay. It may be this simple. All right. Rates were here.
Yeah.
I'm going to wait and see what they do. It's the holidays anyway. I don't really feel like doing anything right now.
Right.
January 1 happens. Rates start to bump down just a little bit. People say, okay, they're moving down. Different programs are released. Primis released the thing where they'll do a cheap refi for you in 6 months.
Oh, I heard him mention that.
Yep. Yeah. So you've got this kind of as a stopgap, a backup plan, if you will. And we're not in the holidays anymore. And here's the other thing. They stopped going up. So in other words, part of the problem, part of the fear is driven by, I don't know what's going to happen.
Right.
Right. Okay. Well, they're moving the right direction. Right. Let's start looking. We're going to find the one that we love. We can afford it. And maybe there's probably a few that are like, okay, if it adjusts by 0.5%, all of a sudden it makes my numbers work. That probably happens a little. I would say that's a very small amount.
Yeah, I would tend to agree with you about that. I think it's confidence driven. I think I think you're exactly right. I think the holiday season has people focused on other things.
I don't really want to afford this anyway.
Yeah.
So yeah.
And look at how much money I'm spending on Christmas. I feel broke.
Yeah. But yet they spent a lot of money on Christmas, so confidence is still there.
Right.
Right? But I think it's a focus thing.
Yeah, you mentioned, or Grant mentioned, and I appreciate information like this because I think it's very relevant. He talked about consumer credit being at maximum levels.
Crazy.
When you go back to the recessionary period, and we had in the last time we went through something that we think is similar to this. We don't know, how similar it is because we won't know that until
it's over.
It's done.
Mm-hmm.
Then we'll be able to reassess, right?
Right.
Hindsight. But one of the things I remember is talking about the reliance upon credit card for household purchases, cash flow, things that people needed.
Mm-hmm. Groceries, simple stuff.
And it's because we go through this stage where we're so confident, right? Money's going to be there, promotion's going to be there, raises are going to be there. We're buying whatever we want to buy.
Then it stops.
And then we're like, oh my gosh, what am I going to do, right?
Hey, I've been guilty, man.
Yeah, well, everybody's done that to a certain extent. But yeah, it's really interesting. I appreciated that comment.
I'll tell you what was really interesting about that, because I don't know why I didn't know that, but I didn't see that coming. I wasn't aware of that. It wasn't. I mean, during the pandemic, that the savings levels were at all-time high.
Correct.
So in 2 years,
right,
we went from all-time savings to some all-time highs in debt. That is that's baffling to me.
So here's the piece of this I think is really interesting too, is the reasoning that I'm probably less optimistic than Grant and maybe some others is that, and I mentioned this, we talk about past dues within the banking business, right?
Yes, this was fascinating.
So people were cash heavy. Now they're credit heavy. And so what happens next in that scenario?
Defaults.
You start having defaults. Well, we have not started seeing the defaults yet. And so what that means is it possible for us to dip out of this before that happens? Well, of course, that's possible.
It's not likely.
But it's really not likely because it's not usually the way it works. And so do I know what's going to happen? Absolutely not. But I do know, generally speaking, we go through cycles where people are cash heavy. Then cash starts to disappear. Liquidity starts to disappear.
But habits don't change.
But habits do not change, and consumer credit goes up. People are buying things they can't afford, or things are getting more expensive and they're having to pay
Things
more.
they shouldn't afford. How about that?
Yeah, and you know what's happened in our local economy. I mean, 3 years ago, a $200,000 house, you know, which you could buy $250 is now $350. You know,
Or more in some cases.
right.
Yeah.
And so layer into that a higher interest rate on top of that, and then you know the normal stuff that goes on: divorce, death, people moving for jobs, and whatever else, or someone being forced to make a decision. So time comes back into this, right?
Right.
You don't have the luxury of time
To ride it out.
and therefore, as a result, it starts costing people money. I just don't think you can have a full cycle until that happens. Maybe you can, but that's why I was saying I think it's going to probably get. I personally believe there's a better chance it's going to get worse before it's going to get better because we haven't seen that shoe drop yet.
That's interesting. It's interesting. Put in the comments. What do you think? I mean, do you think that what is your specific consumer confidence right now? How do you think things are going to play out? Let's go with the horizon, the rest of 2023. We're
Sure.
16 days in,
Right.
right? What do you think's going to happen? What's the cycle for 2023 going to look like? Put it in the comments. I'd love to read that. This is our own little miniature Gallup poll here or whatever, right?
Well, I am one that believes that when you look at the yield curve that we currently have, you know, short-term rates versus long-term rates, when you look at the default rate stuff that we've talked about, inventory, you know, all the data points, I think rates, long-term mortgage rates, are probably going to continue to come down. I think them getting close to 6 was probably what prompted some of the stuff that was happening. I think they will get below 5. Below 6, probably in the mid 5s. I don't know that they're going to get below 5 in 2023, but if they get to 5.5, I think that fixes lots of problems. The question is, will the Fed stop raising rates if they feel like that's going to happen?
And you know that really that's a huge question, and they have to look back at the 80s,
Right.
at the early 80s, and see that lesson, right? That when they slowed on the pressure on those rates too quickly, it was catastrophic.
Correct.
So hopefully, you know, they'll keep doing what they're doing for a long enough period of time. But what's a long enough period of time?
Yeah.
I don't know the answer to that.
And I think that's one of those things where it's like you move it just an inch and then you see what happens for 30 or 60 days, and then you move it just an inch and you see what happens for 30 or 60 days, which is another reason why
It's going to take a little longer.
it's just going to take longer because they don't know, right? They knew, and I'm a believer that, look, I've got some reasonably decent common sense and I've got some education, but I don't consider myself a smart person. I think the people that work at the Fed and they work at high finance and government are really, really smart people. So I think they know more than we know, and I think the reason they're raising rates and continuing to raise rates is that they have information that we don't have access to, right? Common people that are getting their coffee and going to work every day, they're studying stuff that we're not studying day in and day out. Now, Grant Hammond's maybe studying that, but Ronnie Martin's not studying that. So what I would tell you is I think that because of how they came out of the gate and how strong they came out of the gate,
They were not moving inches.
There was a problem.
They're moving feet.
So there was a problem. That's what that tells me. And the fact that they're going to slow a little bit tells me that, hey, they see either some wisdom, you know, in slowing a bit because they don't want to
crash.
They don't want to sink the economy. You know, Jerome Powell doesn't want to be known for that, right? The president doesn't want to be known for that.
Right.
But the fact that they are continuing to be aggressive, which they are, I mean, they've had several 75 basis point increase. Now they're talking about 50 basis points increases. And, you know, I hear plenty of people that say they think that the rise will be over by year end, which is what I think is pushing the mortgage rates down a little bit. But I think we're guessing. I think they're guessing. So every month, every quarter, when the inflation reports come in, when the employment reports come in, it's kind of like wiping the board, you know, and starting over to see what impact those things have. And so, I think 2023 is, if I could use a word, it would be caution for 2023. I think people who are in businesses that are real estate dependent, They're going to have to be smart with their money. They're going to have to change their tactics. They're going to have to do some things differently than they've done it before. I think there's going to be a weeding out of the very average to below average agents, which is going to help bring some lift to the people who work harder, because I'm a big fan that I think you can outwork most people, because most people don't want to work hard.
Don't want to work hard. Yeah.
I mean, just being honest. So
and even if they want to, they don't necessarily know how to.
Well, that's the other thing.
There's a skill to working hard.
Totally agree. And you layer in the people that are willing to work hard and are competent, and I think you get that top 10% of who you're dealing with. Those folks are going to be fine. I think their income may change a little bit, but they're going to be fine. But there are a lot of people taking deals off the table that really don't have any business taking deals off the table. And I'm not saying, hey, I don't think you should be in this business or that business.
Oh, I'll say it.
Well, I mean, it's really,
there are some that definitely shouldn't.
Yeah, and I think it's better. I think these are the types of things. I would compare it to the pandemic and COVID. So this sounds horribly cruel, and it's not intended to be horribly cruel. I think it's just factual. When things get bad, the weaker performing businesses and or business people do not survive. That's the way that's supposed to be, so that the stronger performing businesses and business people,
that's a law of nature.
It is, and I don't think that's a bad thing. I mean, you can say it's sad, and you can say it's unfortunate, maybe, but you could also say it's fortunate for those people that win by those things. And so, when the pandemic happened and people went out of business and whatever, I think it's kind of like a storm washing away stuff.
Well,
right?
and I'm going to take the pressure off of you on that. So I don't know that everything in the world has to be bad or good.
Right.
Some things just are.
Yeah.
I mean, it just is. Is gravity bad or good?
Right.
Well,
yeah.
I don't know. It just is.
Yeah. As I dig out of this hole I'm in over here, one of the things I'd say too is, and this is a comment I say a lot, it's also possible to do your very best and still lose.
Sure.
Right. So it's not a criticism of an individual or a specific, business. It's also possible to do your very best and still lose, because it's just a fact of nature. Everybody can't win all the time.
It just is. Yeah.
So, I think that.
And sometimes you win for a while and then it's over.
Yeah. I would say that those people shouldn't have been winning to begin with, right?
I mean, maybe they should have.
Yeah.
Maybe they got lazy. Maybe the idea wore off. Maybe somebody made a better mousetrap. Maybe. Yeah. The demographics change. I mean, who knows, right? There's again, it's too complex to say you failed because of that.
Yeah, I agree. I always go to this place where I think of Michael Jordan and Kobe Bryant, and I think of the book that Tim Grover wrote, which is called Relentless. And if you've not read that, it's one of my favorite books. But he talks about that what made those guys successful. It wasn't that Kobe Bryant was the most skilled guy or Michael Jordan was the most skilled guy on the court. They outworked everybody, and it's the mental aspect of how they approach the game. And I think in business or in anything, relationships or whatever else, it's all between the ears. It's the mindset of how you do what you do. And I think very average people can be hugely successful with the right mindset.
Yeah, and I'm going to add on to that, because this has been huge for me. As I've gotten a little older and I've had some things fail, I've had some things be successful. I think that the number one time when your mindset makes a difference is when you're in the midst of a failure.
Totally agree.
And when you are sitting there and everything around you is going to hell, and everything that you've touched that was gold is now a big lump of poop.
Yep.
Right? When that happens, and it will absolutely happen, and sometimes you did it to yourself,
yeah,
right? And you sit there, and I asked a friend of mine the other day, I said, how do you react when you realize you are the problem?
Yeah.
And the answer to that question is what's going to define if you're successful or not.
Yeah.
I mean, it just is. Because at some point, you're going to go, oh, crap, it's me. I'm the problem.
How does it, when you do that, when that happens to you, how do you respond? When you realize it's you, because it is us, right? A lot of times it's us.
Yeah.
Because I know how I respond.
Oh, and you want to blame the market, and you want to blame the new agents, and you want to blame, this dumb house seller, and you want to blame, the construction guy for leaving nails on the road that popped your tire. I mean, you want to blame everybody,
Right.
but you.
Right.
And then at some point you go, whoa,
Yeah.
no, it's me.
Right.
I'm the problem.
Yep.
How do I react with that?
Yeah.
So first I get angry at myself.
Yeah, that's what I do.
Oh man, I
That's
get
my
so
go-to.
mad. I
get
beat
pissed.
myself up,
Yeah, I get
and I'm
pissed.
just like, "What? You're an idiot!
Yeah.
How have you had any success? I mean, you're a complete. I mean, this is all going on in my head.
Yep.
Right? You're a complete moron. I'm brutal to myself. I mean, we're talking Clubber Lane to Rocky here.
And I would tell you that's a good thing. There's as long as it accompanies one more piece. So keep
Yep.
going.
So that's number one. Number two, after that, and I've thoroughly beaten myself to a pulp, I
Yep.
get sad.
Okay.
And my sadness is, how did I do this?
Yeah.
I can't believe, and that's usually pretty short.
Yeah. That's
right?
good.
It's pretty short, and I get sad. I get a little depressed. I get a little sullen. I'm not real pleasant to be around for that period of time, and it could last.
Take a walk.
Yeah, it could last a day to, I mean, at worst maybe a week.
Okay.
Right, and then I'm like, okay, now I have a choice.
Yep.
Right, this is a moment right here that I can remember, and I have a choice right now. Am I going to give up on this, right, and move on and do something different?
Right.
Or am I going to pull my pants back up, and get busy,
Yep.
And it so far it's always been option 2 there,
Right.
right? And then I just identify how to not be stupid again. I mean, how else do you say that,
I think as I get older, I have all these things in my head that when I was 20 or 25, they were these unwritten laws that you did not break, right? At least I did for me. These are things you do, and if you want to be successful and you want to feel good about who you are, you don't break these things. And so as I've gotten older, what I realize is those things are still true for me. But what I'm much better at today is not applying those rules to you and other people. Because I used to be really bad about, hey, if you don't look at this the same way I look at this, you're stupid.
Yeah.
There's something
What's
wrong with you, right?
Yeah.
And then you learn as you get a little older, hopefully, and have a little more wisdom, you're thinking, well, I'm the one that was stupid, right? That's a really dumb thing to say. And so for me, anger is my go-to out of the gate. I'm pissed that I would do it. But as I've gotten older, the really cool thing about where I'm really happy about where I am is I can laugh at myself and say, you're smarter than that. You really are smarter than that. You did something stupid.
Right.
But here's the deal, and this has served me really well. I take personal responsibility for everything in my life. And so whether it be personal relationships, work relationships, where I want to be in my career, my health, it doesn't matter what it is my responsibility, and I'm not going to let you or Trent or anybody else walking the streets of Murfreesboro define what I ultimately do, become, my attitude, my outlook, any of that stuff. Mm-hmm. Because the truth is we all have a decision, right? It doesn't matter. The biggest jerk in the world can come our way and mess up our morning, but we still are the ones that get to decide whether or not we're going to let that happen.
Well, and certainly how it's going to affect the next meeting.
That's exactly right. And so, it's one of those things that not everybody can do that. Not everybody does do that. But, man, I wouldn't change that about me at all. And I'm okay being mad at myself. I laugh and forgive myself. I'm really hard on myself. But I'm also very gracious with who I am, and I forgive myself, and I give myself permission to fail. Because I know I'm going to work hard. I know I do the work. I know I have good intentions. I don't do anything intentionally to screw up or to hurt anyone in any way. So I forgive myself, but I go back and I take personal responsibility and I say, you know what? The cool thing about this, and this is why I laugh, I don't have to make this mistake again. If I'm aware of it and I take responsibility for it, I don't have to make this mistake again. And it's the most freeing thing in the world.
I will tell you probably the number one thing that you just said that I am not good at. I am not good at forgiving myself.
Yeah, you got to do that, man.
Oh, dude, I know.
You got to do that.
I know.
Yeah.
But it's hard.
Yeah.
It's hard when you mess something up that you quote unquote should have known better, right? It's hard for me to forgive myself.
Yeah.
Because here's what else creeps in for me is, man, I messed this up for myself, but I messed it up for my wife.
Oh, yeah.
And I messed it up for my kids.
Yep.
And I messed it up for and I'll go through the laundry list, and the next thing you know, I'm sitting here going, I've got the weight of the freaking Rutherford County on my shoulders.
Yep.
Because I messed it up for everybody.
You know,
and it's hard to dig out of that, and that's where the sadness comes in.
Yeah, and to share a personal story, I went through a divorce this past summer, and so in June, July, I went through a divorce.
I didn't know that.
I did, and
That sucks.
It's terrible.
It is not a fun experience.
And I was very close. My wife and I were very close. We'd been friends for a long time, and we hit this crossroad where there were a couple things that we couldn't reconcile, and we tried to, and we just couldn't do it. And so you're chewing each other up because you can't reconcile these differences. And so we made the decision, this is not good for either of us. We're going to part ways, and we're going to do that. And it was really sad. And so we went through that in June. I went to Hawaii in July. She moved out in July. August and September, man, they were tough months, right? And so what you're doing is you're beating yourself up for all the things I did wrong, because I got news for you. Anybody that's married, unmarried, has a friend, has children, you screw up all the time. We make mistakes all the time. And so some of them are not intentional. Part of my mistake that I made is I am so career focused, or have been so career focused in my life, that it was real easy for me to put my wife second. And I did a lot of that.
Because she'll always be there.
She'll always be there, right? She'll be at home. I know if I get home at 4 or 5 or 6 or 7, she's still going to be there, right? And for the most part, she was happy for me to be home. So why'd I come home in a specific point in time, right? I'm focused on conquering the universe, which I think, I think a lot of men have that issue. A lot of men have that problem. But being able to forgive myself and say, hey, I didn't do these things because I was totally selfish. It was somewhat selfish, but my whole family benefited for that success, right? However you define that, my whole family.
You justified.
It's real easy to do that, but August and September were really hard. The other piece of this is we talk about forgiving yourself, right, and being gracious to yourself and moving on. Well, how long are you going to sit around and be miserable about something like that happening? Well, I did it for about 2 months, and my misery may look different than other people's misery. I still function reasonably normal, but
Same.
I was messed up on the inside. It was hard.
And your closest people probably knew.
They knew, yeah.
They could tell.
And I had to not talk about it because I'd get real emotional. You talk about it. I was like, hey, you got to give me a little bit of distance here.
That's why I carry a hanky in my back pocket, buddy.
Yeah. So, but I'm in a much better place now, and I can actually say I have some joy about, that was a really sad situation that I went through. What am I going to do to make sure I don't ever make those mistakes again? So if I'm in a relationship and I find someone else that I can talk into spending time with me long term, what do I need to make sure I don't do to screw that up? Well, I got to reprioritize some things in my life. I can't work, 75 hours a week and expect to have a healthy relationship. It ain't going to happen.
Well, and so I'm going to throw one more little wrinkle in there. And before I say this, I'm not calling
Go ahead,
you this.
call me out.
Okay,
Call me out.
I'm not. I'm talking about me.
Okay,
right.
I understand.
So one of the things that I really struggle with, I have this latent. This has turned into like This Week in Psychology. Man.
All of it, man. We're covering everything.
I love it. Yeah. I have this latent arrogance, right? And most people that meet me would not necessarily say that I'm an arrogant person.
Okay.
Right? Like I'm not going to brag on myself. I'm not going to do any of that. Not much. If it's warranted, I'll talk good about what we do because I'm proud of what we do. But most people would not say that I'm arrogant, but I am. And that arrogance comes through in, to some extent, in my optimism. Hear me out on this.
Okay.
Okay. Things are going poorly, right? Just pick a situation. Something's going poorly. My arrogant self says, oh, yeah, man, you've been through this. You got this. You can handle this, right? You're good enough that you're going to turn this around. Everything's going to be okay.
Yeah.
Well, sometimes it's not, And so when it's not going to be okay, there's like this delusional arrogance that I continue to tell myself that it's going to be okay.
Got it.
And then all of a sudden it's like, bam, dude, it's not going to be okay. And you should have changed your behavior 6 months ago or 4 months ago or whatever to adjust.
Right.
And kind of the same thing. You're working 75 hours a week. Everything's going to be cool.
Right.
I'm benefiting my family for this.
Sure.
So I'm justifying it.
Easy to rationalize.
Right. And my arrogant self says, she loves me enough
Yeah.
that it's okay if I am not home for 80 hours or
Right.
whatever, right?
She knows I'm working.
It's not like I'm cheating on her. It's
Yeah.
not like I'm,
out at the club with
right,
the boys.
I'm definitely not that guy
Yeah.
or whatever,
Yeah.
right? So, but I am calling you out now.
Yeah.
That's it. There's an arrogance to that.
Yeah, there is, and I don't know where I personally have reconciled that is, you go back to the why. So Simon Sinek talks about what everybody has as a why you do what you do, and I know I'm very self-aware, and so I know why I did those things, and part of that has to do with. And I'm going to jump around a little bit, but if you're a fan of the Enneagram and you're aware of that scenario, so I'm an 8
me too.
in the Enneagram.
Like off the charts.
Correct.
Yes.
And so I've got an 8. I'm an 8 with 7 wing. And so if you study that tool, they say that something happened as a child that forced you forward faster than you should have been forced forward, right? You had to grow up and be much more responsible sooner than you should have, right? And so they say, whoever they is, this come up with this, that's part of the catalyst for that. Well, for me, I grew up in what would be defined, and I'm not looking for sympathy for anybody because again, I take personal responsibility. That's who I am. But I grew up in a place where we didn't have stuff, right? And so. I was talking to I'm dating this lady and she's got a son and he was asking me about lunch and we were talking about other things and he said, "Did you pack your lunch when you went to school?" And I said, "Usually, yes." I said, "But it's mostly because my parents didn't have money." And I said, if I wanted anything to eat at lunch, I had to pack something because there wasn't any money to go buy lunch.
Right.
And there were lots of places, there were lots of times where I would go to school and I just didn't have lunch, right? I'd have to wait till I get home to eat. But I think for me, my why is I didn't want to grow up in a place where I didn't feel like I had control over my stability, right? And so I was going to do whatever I had to do to have stability. And so for me, that was picking a job where I knew, unlike you, I get a paycheck every week, right? You got to go out and hunt and scratch and claw, and you got to make it happen because there's not a salary that comes with the J. Harmon team, right? It's all on your back. You're carrying it all.
Yep.
And so for me, I could have been an entrepreneur. I could have tried to do some other things. I didn't want that, but I wanted to earn as much as I could earn, knowing I was going to get a paycheck every single week. Didn't have to worry about it. And so what do you have to be successful? What do you have to do to be successful in that venue? Well, some of the exact same things you have to be successful as a small business person, which means I got to outwork everybody else.
Presence is everything.
Right? So I have to, for my clients, for the people at the office, I got to be the first one in. I got to be the last one to leave.
And you got to study when you get home.
I got to do two people's jobs, all along the way until I get resources and other things to do that. And so fortunately, I'm in a place now where I do have resources and I don't have to do those things. But
then how do you stop?
That's the mind thing.
Do you know what I
man.
mean?
That's the mind. And that's what caused me. That's the arrogance. That is the arrogance that you're talking about.
If I stop, I'm the only one that can do this.
Somebody's catching up. Somebody's going to catch me. Somebody's going to pass me, right? Maybe someone won't think I'm as good. Somebody will take my clients. Yeah, you're just paranoid.
Yeah.
Totally.
All the time.
Yeah.
I hear you.
You act like you're talking about yourself now.
Man.
Oh, mercy.
The
things we men do.
I'll tell you what, this week in real estate brought to you by Psychology 101. But yeah, man, this is good. This is not the direction I anticipated this particular podcast.
We can talk about real estate another time.
Oh, it's awesome. So again, share in the comments. What are some of the things that, quite honestly, prevent you from continued success, right? And I think so. I think you were just touching on this. Once you've tasted some success, and once you've done a good job, and once you've had people pat you on the back and said, "Man, you're killing it. You're doing a great job."
Right.
It builds in a fear that, if I'm up now, I'm going to be down later. Well, how long can I delay later?
Right.
And it's hard, and that tends to make a block, and then you get desperation. It's just this cycle. So what are things, those of you that are watching, what are things that you've experienced that have been barriers to that? What are some other things that we're not talking about yet? And also, how do you fight through them, right? And obviously there's the one answer is, well, you just change your mindset. Well, okay. Yeah. I mean, easy enough to say, right? But how do you do it?
Yeah. Well, one of the things I try to do is remind myself when I fail that is temporary, because I've had lots of success in the past, and I draw upon that. And I think that's where confidence comes from with people that are very confident. But the other thing, the piece that helps balance that natural tendency to prevent us from being arrogant or to stay in that lane, because we're all capable of jumping in and out of those things, fear, happiness, sadness, arrogance, cruelty.
Sometimes without our choice.
Yeah, and we get pushed in them, or we are our lack of awareness that we're even in them. We need other people around us to help.
That's more what I was talking about.
Hold the mirror up for us.
Yeah.
But to just be mindful of the fact that all things are temporary. So all success is temporary, all failure is temporary, and I don't say that as anything else other than to be a motivator to say, hey, look, yeah, you may have done X, Y, and Z, but Kobe Bryant. One of the things I remember about him, and I'm not even a huge basketball player, but I'm a fan of his mindset and how successful he was. But there's a clip running around, a video clip, where I don't remember what series it was. He was playing a game and they were up 3 or 4 to nothing, in the series, and I guess 3. And he made the comment. Somebody was asking him how he felt. He's like, "What do you mean?" And he was like, "Well, you're up 3-0." And he's like, "So that doesn't mean anything. Until we have won, I do not even allow myself to celebrate. We've done nothing. Until we've won, we've done nothing." And I think, you can take everything to an extreme. I think that's a very healthy mindset, because it keeps you from getting too far into that, bask in my glory, which people can do. And it also keeps you from getting too far that when we make mistakes, which we're going to, because they're life's best teachers, that's the thing. Those are the things that drive our future success, are the mistakes that we make.
100%.
But they prevent us from getting down on ourselves to saying, hey, you're such an idiot. You can never be successful. Well, that's not really true. You've had lots of success. You just did something stupid, or you did something that you weren't aware, would have a consequence that you weren't planning for. And so that moderation in good times and bad times, to me, it's the secret to keep that balance.
I love that. Yeah, I agree. Hey, we're going to wrap this up, but before we do, we want to give a shout out to our friend Bryan Nale over at Primis. He is a huge supporter of all things Spread the Positive. Does a lot of work here in our community. Does support the Spread the Positive mission and network. If you are interested in supporting Spread the Positive, we'd love to have you jump in as well. Trent, do we have Bryan's clip? So let's hear from Bryan real quick.
Hey, my name is Bryan Nale. I'm a mortgage loan officer at Primis Bank Mortgage, and I want to tell you that I absolutely love being a member of the Spread the Positive Network. It's such a great mission, and it helps bring so much positivity to our community. It's a true pleasure to be part of. There are a lot of ways to navigate financing a home, and in markets like this, having the advice of a trusted local professional is key to making sure you get the right advice for your specific circumstances. Whether you're interested in the purchase of a new home, a second home, or have a need for a refinance, I'd love to earn your trust. If I can help you nail your mortgage, call me at 615-243-3976 or visit nailyourmortgage.com, and I'll be happy to talk with you.
Primis Mortgage is a subsidiary of Primis Bank, a member FDIC, equal housing opportunity. As always, all loans are subject to approval. Primis Mortgage, NMLS number 1894879.
All right, Ronnie. So here's the deal. If you stroke a check to Spread the Positive and help support the mission, we can make a commercial like that for you.
That's a really good commercial.
It's a great commercial.
Hey, maybe next time I come, we'll talk about real estate.
Yeah, maybe. This has been really good, though. Hey, Ronnie's my guy over at Pinnacle Financial Partners. If you're thinking about a small business, schedule some time with Ronnie. Even if you're not looking at a loan or anything like that, God, he is so smart about that, and he will give you unbiased, honest advice. And I mean, he'll flat out tell you, I'm not your guy, or I am your guy. But he'll also help you pick it apart and find some holes in stuff and challenge you to think about ways. And the more you do that, the more likely you are to be successful with that. So I just offered your time for you.
Thank you. I appreciate that.
You're welcome.
Yeah.
But hit Ronnie up for that kind of stuff.
Thanks a lot for the invitation.
Yeah, man. And if you need a mortgage, of course, call Bryan. If you need something in real estate, again, some advice, whatever, kind of figure out where you are in the market right now, give me a shout. Trent, you got anything, buddy? No, he said no. Just in case you couldn't hear that. I guess that's it. Have a great week, Ronnie.
You as well.
Thanks for watching.
Appreciate you, Trent.